Hey everyone, Gabrielle Davis here with eXp Realty, and I am here to talk to you today about mortgage interest rates. And if you've been watching the market, you know that they have been bouncing around between 6 and 7%, even a little bit higher since October. Well, I'm here to talk about the trends, some updates, and a few things that are happening behind the scenes that you may not realize that will affect buyers and sellers out there. So stick with me and let's break it down. So first I want to start with market trends and an interest rate watch. During Trump's last administration, the rates hovered around 4%, but we do not expect those to come back. We do, according to the National Association of Realtors, expect them to stabilize around 6% and kind of go back and bounce around between 5.5% and 6.5%. You know, the rates of after COVID were not reasonable. They actually caused a lot of problems and increased our property values. So we do not expect that. And I want to say that the average 30-year conventional rate over, since 1971 happens to be 7.8%. So 6% I think is pretty good. My first mortgage was definitely double digits in the 80s at about 13%. So I'd be happy with 6%. So what does the Fed watch? Two key things, inflation and employment data. And until we see significant progress in those areas, we are not expecting any drastic movements. The Fed is kind of in a wait and hold mode. The 10-year bond yield has been fluctuating from about 4.3 to 4.49. And if it stays below 4.5, we won't see any dramatic changes. But if it does break that 4.5 level and goes up, it could force mortgage interest rates, some upward pressure on those, and we could see increases. You know, the Fed watches housing closely because it is a big part of the inflation rate. And so what we want to see is a controlled, measured decrease in interest rates rather than a sharp drop, which we experienced, because we don't want to overheat the market again like it was. Okay, let's go behind the scenes to mortgage companies. I don't think that most people realize this, but there could be up to a month's worth of additional work after a loan closes. The mortgage companies have a whole compliance thing that they need to go through and deal with secondary markets. This, of course, needs extra staff and takes extra time, which costs them money. And who pays for that? We do, with an increased interest rate. So the good news is that there are some regulatory discussions to decrease these costs. For example, if the FHA reduced their mortgage insurance, then the interest rates would reduce for the buyers. Well, could the mortgage companies, potentially absorb that the of costs into their P&L? Well, sure, they can, but I think competition won't allow that, and that the majority of that cost will be passed on to the consumers, which is great news. So what does this mean for buyers? Well, if you're looking to buy a home, it's an interesting time. Rates have stabilized since Christmas at about 7% for conventional, 6.625 for FHA and VA. So if you are ready to buy now, and you can lock right now within the next 30 days, that's probably a good idea. Talk to your lender about that. If it's a little bit longer, then I would let the rate float, and that's probably the best strategy for you. But again, talk to your lender that you are working with, because they are the experts. Another thing that you may not be aware of is that Texas wants to increase the homestead exemption again. $40,000 and $50,000 for seniors. So that is a great win for all of us, especially for buyers that are a little tight on their mortgage payments. So now this will be voted on in November, be retroactive to January of this year. And so people won't really see that in their mortgage payments until 2026, but it is good news. Get out and vote for that in November, but I'm sure it will pass. So. Okay, for sellers, the market is showing resilience. Buyers are still active and due to the stabilized rates. And I think they're sort of getting used to it and tired of putting their lives on hold. So I always say, marry the house, date the rate, because the rates can change. Do not put your life on hold. However, affordability is still a concern for many buyers out there. So pricing competitively and potentially offering some incentives like buy downs for buyers will attract more buyers. And of course, move-in ready homes are the ones that are more desirable, go quicker, and sell for top dollar. And so remember I said that the feds were watching housing activity. Well, if we see too much activity, it could slow rate cuts, but we want a balanced pace. So sellers, get out there now while it's stable, and don't wait until we have some sort of major change happen. What's the bottom line? Well, it's a moment of opportunity, but it's also one that requires strategy. So if you're looking to buy or sell, understanding the trends and also making and understanding key factors helps making informed decisions for you and your family. So if you found this information helpful, please feel free to pass it along, and also call us if you have any questions. We are here to help you. Debbie and I are also going to go over some things in our next video about maybe some myths we have about loans and help people navigate those. There have been some changes and you might be surprised with some of them. So thanks for watching, and we will see you next time.